dear Forex traders. Welcome to IFC Markets. We are watching weekly market overview. Let's start. Last week, the US dollar decline obviously slowed down. However, the greenback lost ground against the Japanese yen, gaining 1.1%, and the British pound, which added 0.9%. The Swiss franc also rose but modestly by 0.5%. The Canadian dollar and the euro were traded in sideways. The Australian dollar was the outsider this time, losing 0.7%. The US dollar index fell by 0.2%. On the whole, the week was pretty quiet. Scanty news flow enabled market participants to take a breather after the September Fed meeting, which surprised the markets, leaving bond purchases unchanged, while the main factors of currency movements were speeches by the central bankers and the budget risk in the United States. The coming week promises to be much richer in key releases and the potential violent movements. Already today, on Monday, Canada GDP data for July will be released. On Tuesday, we are awaiting for the data on manufacturing activity in China and the meeting of the Reserve Bank of Australia, which is expected to leave rates unchanged at 2.5% but may express concern about the recent strengthening of the Aussie. On Wednesday, we are awaiting the ECB meeting, and on Thursday, the Eurozone and the UK PMI indexes. On Friday, September payrolls and unemployment in the United States are in the focus. The latest figures on employment in the US fell short of market expectations, but taking into account confidently declining numbers of jobless claims, the hope for strong data is still there. According to the last report of the Commodity Futures Trading Commission, futures market participants continue to actively reduce net short positions in the Canadian dollar and the British pound, and also significantly increased the net long position on the European currency, which showed the greatest change in the positioning among the major currencies. Thus, significant net short positions are observed only on the Japanese yen and the Australian dollar, and the largest net long position on the European currency. Meanwhile, the euro dollar is being traded in the range of 1.3460 to 1.3560. A break of the range will determine the direction of future movements. In case of breaking up, a way will be opened for testing a 2013 high at 1.3710. Technicals do not contradict to this scenario. However, a drop below 1.3450 would increase pressure on the pair, driving it to lower territory. But we would consider strategic short positions only in case of a confident close below 1.34. The pound dollar broke the mark of a 1.61, and it looks like it is not going to stop there. Further growth involves testing the highs of the year around 1.6320. Strong support is located at 1.59780. The dollar yen fell last week and is now being traded near 1-month lows and the rising dynamic support. Taking into account sell signals from technical indicators, the downward movement can continue, but short-term target may be at the level of 96.00, located close to the 200-day moving average. If the dynamic support stands pressure and this scenario is more likely in terms of medium-term dynamics, we can expect a return to the 3-digit marks. You are watching Weekly Market Overview by IFC Markets. Do not forget to subscribe to our YouTube channel and follow us every Tuesday. Goodbye.